China has fallen out of favour with investors in recent months due to competition conflicts with the United States and a domestic underperformance. However, Chinese shares have been on a strong run higher recently. You can see here in the China 50, it's hit peaks of more than 20% from early 2024 lows over the last couple of weeks, causing some to ask, is this time to start investing in China again? You can see technically price has just broken out of that trend line to the upside. So some analysts say, well, despite this bear market rally, the fundamental outlook has not really changed and economic uncertainty remains, with lower earnings set to remain for now in China. However, other analysts point to very high stock valuations in the US and Japan as a potential driver for renewed interest in China and likely to encourage a further rotation of funds. Now, what can we learn seasonally? Now, if we look at the Shanghai Composite, this is a composite index which encompasses all A shares and B shares traded on the Shanghai Stock Exchange. And it does serve as a comprehensive gauge of its listed companies' performance, offers a broad perspective on the exchange's activity, with more focused indices like the SSE 50 and 180 highlight market leaders based on their market capitalisation. So what can we see seasonally? Well, seasonally, there is a weak period ahead. Over the last 20 years, the Shanghai Composite Index has fallen an average 3.87%, with some pretty large gains in 2008, 15 and 2001, 2018. If we take a look, and that's from the 1st of June through to 29th of October. And if we look at the Shanghai 50, we can see that too has a weak period with an average return of 2.58% during this 29th of May to the 1st of October period. So will we see a pullback in the recent gains that we've seen in China's stocks? Will they pull back now with this weak summer seasonal pullback, regardless of whether China's recovery is sustainable or not? Remember, don't just trade it, season exit. There are risks with this outlook, and the most obvious risk, of course, is that prior seasonal patterns do not necessarily repeat themselves each year.